On July 9th, Bitcoin surged past the key resistance level of 111,000, sparking a massive wave of FOMO-driven buying. Now, the coin soared over 10% in the following days. Although the most recent strength is largely attributed to technical factors, there remains the overarching fundamental drivers. Now, the main factor remains broad adoption. Major institutions like BlackRock and even the US government are embracing Bitcoin, while retail interest grows through accessible, reduced-size trading options like CME Group's Bitcoin Friday futures, which is 1/50th of one Bitcoin, or the longer-dated spot-quoted Bitcoin futures, which are 1/100th of one Bitcoin. Now, Bitcoin's role is also evolving. Once it was viewed as a speculative, high-volatility asset correlated to risk assets, and it's now possibly emerging as a hedge against fiat currency and inflation. Now, the dollar has weakened, dropping 12% against the euro and 5% against the yen just this year. Meanwhile, gold has climbed over 25% year to date, which closely mirrors Bitcoin's gain of 24%. The big question now is what's next? Will these record highs and the ensuing headlines pull more buyers into the space in order to build on these new recent waves? So we're going to be using the Bitcoin Friday futures in these trade examples. If a trader believes that Bitcoin could rally from here, they could express that by buying the July 25th, week 4 Bitcoin Friday futures at 116,500 and target a move up to the psychological level of 125,000. Now, a stop for this trade could be placed below at 110,000. This trade could make $170 if the target is reached and risks 130 if you're stopped at your level. Now, if a trader believes that Bitcoin could fall from here, they could sell that July 25th Bitcoin Friday futures at 116,500 and target a move to the June support level of 100,000. Now, a stop for this trade could be placed above at 127,000. This trade can make $330 if the target is reached and risks 210 if you're stopped out of your level.